Well, look at this chart. So let me go back in time a little bit here. I'll get my marker all gigged up here. If I go back in time, you can see that this falls into one of those symbols I really like. Why? Because it's boring. It goes between this range of about $32 and about maybe $41 on a good day, $43. But for the last year, it's been in this zone. I mean, if I go back 2 years, there was a little moment there where it was up here. But for the most part, people look at GM as a very mature company, a company that will probably get bailouts if it was ever in trouble by the government because it's so big. The government's going to think not to let it fail. So they look at this company as just something that's going to be around for a long time. Not only that, the company, every time it reports earnings, it's making money. It's giving some of that money back to the investors in the form of dividends. Folks are just like, okay, GM's a stock, and it's kind of almost a defensive play out there. It's not really considered a high tech play. So these are the stocks that I like to create income off of. And I can do that using options. And this pattern is coming on down from the high levels to its low levels. And based on the most recent history, I'm actually expecting it to kind of find a bottom here at $33. And so this is a perfect opportunity to do a multiple of different transactions that could start or continue some income. Now, we featured GM in the past. And so folks may have been paper or even real money trading GM from one of our past shows. So if you have either some stock or some back month call options, then this bottom here is going to be a perfect time for you to sell your protective puts or another source of income on that position. So we generate two sources of income on our positions when we get them going. One is the income from selling the covered option. In this case, it would be a covered call. And the second source of income is rolling out our protective options. Every time we roll them out, we get another paycheck. And so the timing is coming. Now I'm going to wait for it to bottom. I'm not going to, jump on this until it actually shows me the signals that it's kind of forming a bottom and going back up. But that would be our signal in order to sell our protective options and get ready again to do this cycle all over again. Now, if you're not in that initial covering position, if you didn't take our heed with either your simulator, paper trading, or real money account in the past, then this would be a perfect opportunity to either buy some stock or buy some back month deep in the money call options, which act as stock replacements with a little bit of leverage. One of the benefits, though, of going with the stock, and it's not that too expensive of a stock, is that you'd be putting yourself up for some of that dividend when it comes around quarterly. But if that doesn't matter to you, then using a leveraged option, that's not a bad idea. There's plenty of trading on GM, so you're not going to have any problems with that. Again, we're going to wait for the signals from GM that a bottom has been found, but we're forecasting it to be soon around this $33 mark. Once we get that signal, you can start this process of having that initial covering position in place. Finally, if you're one of those folks that's been contrarian and you started your premium selling position by setting up an initial covering position at one of these tops rather than a bottom, that means you've either shorted some GM stock or you bought some back month deep in the money put options. This is going to be the perfect opportunity to set up the first paycheck or the subsequent paycheck. This is where you're going to sell some covered puts because you have that initial covering position in place that you did when we were at the top of the channel. So you're going to sell those covered puts and you're going to buy some protective calls, probably with a strike price somewhere just outside of your break even price. So probably with a strike price up here around $42, $43. You're going to put those in place. and then you're just going to let time work for you. When you've got those two trades in place, SIP, you've basically created a range bound strategy, which if the underlying symbol goes outside of the range in either way, it self adjusts. So the whole time that those trades are in place, you could rest easy. The stock can do anything and you're going to be protected against risk.
So I'm really liking the support there at that 33 level. And my follow-up question would be, uh, when we get there, what's the next thing that you're going to be looking for in order to confirm that a bottom has been found? And I know we tend to look at your customized MACD. And is that
Mhm.
enough for you? Do you need any other indicators, or are you confident enough with the support that you've developed or that you've identified and the crossing of the MACD, along with maybe, looking at some of the options pricing?
That's a super great question. So the scoop is I like these end of day indicators. So the fast MACD is one that I don't look at during the day. I look at it at the end of the day after the market is closed. So at the end of every day, I'll come by and just like you said, I'll look at this level of $33 and I'll correlate that with a crossing of the MACD. You can see we haven't had that crossing yet. We had a crossing up here telling us that a top was found, and sure enough, it was very much right. I'm going to wait. And so every evening, I'm going to check in with this chart to see if I get that indication. Now, when I do get that indication, I may want to look for some volume validation, some price bars. We can use the bars, whether you're using candlestick analysis or just basic Western analysis of simple S and Z bars, or things we call like Lincoln's hats or upside down Lincoln's hats, things like that, to let us know that the other factors do agree with that crossing of the MACD. But here's the big key, and this is where I use automation. All of these trading platforms, all of our brokers these days have some sort of conditional ordering that they can place, which basically means you can program in advance what it should look for during the next trading day to actually place the trade. And I use that to the most. What I like to do is I like to make sure, and I program this the night before. So when I see that MACD crossing and I verify it with some volume and some price action, if I decide that I want to try to take action the next day, I spend a couple of additional minutes that evening and I program the automated trader for the next day. So I'll make sure that number one, I don't want it to be trying to do any trading during the first hour of trading or the morning session. That's because there's economic news being released. People are digesting earnings. Those folks who haven't yet gone off to work for the day are in there kind of creating some volatility. So I want all of that to calm down. I want to be in the afternoon session, maybe even in the last hour of trading, professional hour. And at that point, I want to make sure that I'm trading in the correct direction. So I want to be trading above the previous day close in the case of a bottom, in the case of a top, trading below. These are all basic rules that the conditional trader can take into consideration. Make sure I'm trading above yesterday's close. Make sure I'm trading above today's open range, which is the high of the first 30 minutes. Make sure that the RSI is pointing up, the on balance volume is pointing up, the accumulation distribution. I talk to my program participants about these exact follow through rules, but I basically let the automatic trader do that for me, because the next time I'm actually going to sit down and look at the charts is not during the trading day, but the next evening. And I'll just come in and see if that automated trader was successful or not in placing an order. And if it wasn't, I'll see if I want to try again the next day. If it was, great. I'll start managing that position. But it becomes very robotic and it's done only after hours so that I have my days free. And so it's just a cool little process that I go through so that I can have my days free. And you can program those automatic traders to either be limit orders or market orders. It depends on your broker. Talk to your broker. And a lot of the brokers now actually have what they call API software, which means you can have a external automatic trader connected to your brokerage account, and that guy just sends, instructions. And so, automation is key.